DeepSeek recently unveiled its R1 AI model, a next-generation artificial intelligence system promising groundbreaking efficiency and performance. The launch has stirred waves in the tech community, positioning DeepSeek as a formidable player in the global AI landscape. The R1 model is said to rival OpenAI's leading systems, yet at a fraction of the cost, making it a potential game-changer in AI technology. As a Chinese company, DeepSeek's advancements have added a layer of geopolitical tension to the technological race. The R1 model's capabilities, as claimed by DeepSeek, brought into question the competitive edge previously held by American tech giants like Nvidia and OpenAI. Investors and analysts were left pondering the implications of such innovation emerging from China, a country already at the forefront of the AI revolution. DeepSeek's entry into the AI arena was not just about technological superiority, but also about challenging the existing economic and political dynamics. The company's ability to produce a model with such potential at a lower cost has shaken the assumptions about the resources needed for AI development. The financial markets reacted swiftly and dramatically to DeepSeek's R1 launch. On January 27, U.S. tech stocks experienced a significant sell-off, with chipmakers bearing the brunt of investor anxiety. The S&P 500 dropped by 1.5%, while the Nasdaq faced a steeper decline of over 3%. The sell-off was driven by fears of increased competition from China, perceived as a growing threat to U.S. tech dominance. Investors speculated that DeepSeek's cost-efficient model could undermine the market share of established companies like Nvidia. Particularly affected were chipmakers, with Nvidia experiencing the largest single-day value loss in its history, shedding $589 billion in market capitalization. The panic was not limited to Nvidia. Other chip companies like AMD and Broadcom also saw significant declines. The initial market response to DeepSeek's announcement demonstrated the high stakes involved in the AI arms race. The sell-off underscored the need for companies to innovate continually and adapt to an ever-evolving landscape. Despite the initial panic, Nvidia managed to stage a remarkable recovery in the wake of the sell-off. Following the dramatic decline, Nvidia's stock rebounded in pre-market trading on January 28, rising over 5%. This recovery was fueled by a mix of strategic communication and investor reassurances from the company. Nvidia characterized DeepSeek's R1 model as an excellent AI advancement, emphasizing the use of widely available models and export-compliant hardware. By framing DeepSeek's innovation as complementary rather than directly competitive, Nvidia assuaged fears of a significant market disruption. Analysts pointed to Nvidia's robust pipeline of AI-focused products and its strategic partnerships with leading tech firms as indicators of sustained growth. Nvidia's rebound underscored the resilience of established tech firms in the face of emerging competition. The company's proactive approach to managing investor sentiment and its commitment to innovation demonstrated its capacity to withstand market volatility. As Nvidia continues to build on its strengths, its experience offers valuable lessons for other companies navigating the complexities of the AI-driven landscape. In the aftermath of DeepSeek's R1 launch, Nvidia and other major chip companies issued statements aimed at calming investor nerves. Nvidia's commentary on DeepSeek's model as an excellent AI advancement strategically positioned the company as an ally rather than an opponent in the AI race. Other chip makers, including AMD and Broadcom, also weighed in with supportive statements. These companies emphasized the collaborative nature of the tech industry and the mutual benefits that arise from technological advancements. By celebrating innovation and underscoring the interconnected nature of the tech ecosystem, these statements aimed to reassure investors. The calming effect of these statements was evident in the subsequent rebound of chip stocks. The coordinated response from chip companies highlighted the importance of strategic communication in navigating market uncertainties. By addressing investor concerns and emphasizing the potential for symbiotic growth, these companies managed to reinforce confidence in their long-term prospects. The launch of DeepSeek's R1 model elicited a wide range of reactions from industry leaders and analysts. OpenAI CEO Sam Altman praised R1's efficiency, acknowledging the model's potential impact on the industry. In the political arena, President Trump characterized the launch as both a positive development and a wake-up call for U.S. industries. His remarks underscored the geopolitical dimensions of the AI race, emphasizing the need for American companies to remain vigilant. David Sachs, the president's AI and crypto czar, echoed these sentiments, viewing DeepSeek's success as a sign of intensifying competition. Billionaire investor Mark Andreessen labeled the R1 launch as AI's Sputnik moment, drawing parallels to the Cold War space race. Andreessen's comments resonated with investors, prompting a reassessment of the competitive landscape. These diverse reactions from key figures demonstrated the multifaceted nature of the AI race. As industry leaders and policymakers grapple with the implications of DeepSeek's advancements, the need for strategic foresight and investment in AI capabilities becomes increasingly apparent. DeepSeek's R1 model claims have drawn both admiration and skepticism. The company asserts a modest investment of $5.6 million, raising eyebrows. Analysts like Stacy Rasgon challenge this, citing omitted costs. Reports suggest DeepSeek may own over $1 billion in Nvidia equipment. High-profile figures like Elon Musk suggest the company's resources are extensive. These revelations spark a debate on transparency and trust in tech. The volatile reaction to DeepSeek's R1 launch had a pronounced impact on the fortunes of tech billionaires. Nvidia's Jensen Huang and Oracle's Larry Ellison were among the most affected, experiencing substantial losses as the stock market reacted to the new competition. The decline in tech stocks underscored the intertwined nature of personal wealth and corporate valuation within the tech industry. The market turbulence was a stark reminder of the vulnerabilities inherent in tech investments. As investors recalibrated their portfolios in response to DeepSeek's announcement, the fortunes of tech billionaires reflected the broader uncertainties facing the industry. Despite the initial financial setback, many tech billionaires remain optimistic about the long-term prospects of the industry. Their continued investment in innovative technologies and strategic partnerships suggests confidence in the resilience of the tech sector. As the market stabilizes, these leaders are likely to play a pivotal role in shaping the future trajectory of AI development and tech investments. The experiences of these industry leaders offer valuable insights into the dynamic interplay between technological innovation and financial markets. DeepSeek's R1 launch is emblematic of the broader trends shaping the AI and tech industry. The emergence of new players like DeepSeek highlights the shifting dynamics in the global tech landscape. The AI race is not just a battle for technological supremacy, but also a contest for economic and geopolitical influence. The potential of AI to revolutionize industries and redefine economic power structures underscores the urgency for companies to invest in cutting-edge technologies. The competitive pressures introduced by DeepSeek and other new entrants serve as a catalyst for established firms to enhance their capabilities. The interplay of competition and collaboration will be crucial in fostering a vibrant and dynamic tech ecosystem. The geopolitical dimensions of the AI race are also becoming more pronounced, with countries vying for leadership in AI innovation. As the lines between technological and geopolitical competition blur, the stakes for maintaining a competitive edge in AI have never been higher. As companies navigate this complex landscape, the ability to innovate, adapt, and collaborate will be essential for sustaining growth and achieving long-term success. As the dust settles from the initial market reaction to DeepSeek's R1 model, attention is turning to the upcoming earnings reports from major tech companies. Meta, Microsoft, and Tesla are set to release their earnings on January 29, followed by Apple on January 30th. These reports will provide valuable insights into how these companies are navigating the competitive pressures introduced by new entrants in the AI space. Investors and analysts are keen to assess the impact of AI advancements on these companies' financial performance and strategic priorities. The earnings reports will shed light on how established tech giants are responding to the challenges and opportunities presented by the evolving AI landscape. Looking ahead, the future outlook for the tech industry remains promising, albeit with challenges that need to be addressed. The continued investment in AI and related technologies is expected to drive growth and innovation across various sectors. Companies that can effectively harness the power of AI and adapt to changing market dynamics are likely to emerge as leaders in the new digital economy. The upcoming earnings season will offer a glimpse into how tech companies are positioning themselves for the future and their strategies for navigating an increasingly complex and interconnected world.